Hello, investors and traders, and welcome to the Midweek Report. I'm AJMonte, Chief Market Strategist with Sticky Trades. And we had a big day that wound up very close to unchanged. I just want to show you something for those of you who are interested in keeping track of economic data and anything that's Fed related. If you go to forexfactory.com, you could see that they have a calendar on here that shows you the different events that are coming up around the world, and particularly the U.S. economy. Right here, we had the GDP numbers come in slightly higher than what was forecasted at 5%. Now, this puts a wrench in the bulls' plan that is basically hoping for a reduction in rates. And if the Fed is seeing a stronger economy than what was forecasted, then they may even decide to raise rates down the road. So you have to keep an eye on that. Tomorrow, as you go here, you could fast forward to tomorrow to see what tomorrow's calendar looks like. And we have the core PCE numbers coming out. We have unemployment claims coming out. So that might have an effect on the market. But if I go to the chart, you're going to see DIA has this very well pronounced shooting star right there. Shooting star is basically a very small body candle that has a longer shadow on top of it. That's 1.5 to 2 times the length of the body. And that's taken as one of my 4 favorite candles, which are more predictable than most others. 80% of the time when you see those shooting stars, we generally go down from there. Again, no guarantee, but 80%, pretty good probability that could happen. So the shaded area on my chart here is the gap fill zone. I just left that up there to give everyone a better eyeball, especially the option traders who might be short puts down below the market here in some sort of a diagonal spread. So this whole gray area is still the long-standing target area for the gap fill. Now, if I look at IWM, you're going to see, again, a more pronounced shooting star where the body of the candle is so much smaller than that shadow. And you can see we saw a shooting star back here. We saw a shooting star very much at the high back here in August. So with that, the battle really came between the buyers trying to push it up to a higher high than what we saw back in earlier this month. But the sellers came back with force, and for the rest of the day, right up from noon onward, we had this sell-off occurring right into the close. So that's IWM. That too has gaps below the market. I have that highlighted with this gray shaded area for the option traders. I'm not putting any target lines on that because I do that on Friday. But that shaded area is really to identify that gap fill that I do believe is going to fill eventually here in the near future. Now, if we look at QQQ, again, we don't have a shooting star, but we have a very well-defined red candle. And this is extremely interesting because we had higher highs today than what we had last week. But interestingly enough, and you don't see this too often, the stochastic is steadily going lower. Now, we haven't seen the hinge or the pivot point, at least not yet, in the CCI, but I think we're going to see that tomorrow. I know it's hard to forecast what these oscillators are going to do, but I think we're going to see a pivot in the CCI tomorrow. So keep your eye on that. That's going to give us a clue that the sellers are starting to move in to either take profits, because we have a nice long up leg here. So I'm sure some of those buyers are interested in taking some profits, especially when we're at a resistance point that you can see from July up here. So we have this negative divergence still intact on the CCI. We have this exhaustion gap on the Qs that I do believe is going to fill. That is one of the guarantees that I can add to my S&P guarantee and the VIX guarantee is that gaps on the VIX fill 100% of the time and exhaustion gaps on the major markets fill 100% of the time. The big question is that I always get asked is when. We don't know when, of course, but that is a guarantee that that exhaustion gap will be filled. Go back in time a couple of weeks and you'll see the presentation that I did on the breakaway gap, the runaway gap, and then the exhaustion gaps, and you'll see why on putting that guarantee out on those gap fill areas, and that's why they're shaded out like that. Now, if we look at SPY, again, the gap fill, there's the exhaustion gap that I think will fill. Very big red candle. We closed pretty much on the lows. There's almost no shadow underneath that candle. Just a little bit of a bounce towards the close, but right up in the last hour, we had that persistent selling coming in. And again, the stochastic is still heading lower. We have a negative divergence on the CCI, which is what I refer to as a bearish flag, not a flag pattern, but a bearish flag. It's like a warning flag that comes out when you see those negative divergences. You definitely do not want to ignore those. Now, looking at the VIX, we have a green candle finally breaking up this long stretch of red. Now, what I would love to have seen for those who are short the market would be a pivot up on the CCI with that green candle. We didn't get that. We got a buy signal on the stochastic, but we do not have, at least not yet, do not have that pivot showing on the CCI. I think that will happen tomorrow for the VIX. And that gap that I was referring to is all the way back here when the VIX gap down. That gap fill would be right around 1663. They have a penny gap right there I think will fill. These longer term targets on the VIX are still in place. I haven't moved those at all. They're just sitting there right now. For those of you who are pilots, you know what it means when the stall warning goes out, right? It means you're about to drop. It means you're losing airspeed. Well, a bullish VIX is a stall warning for the general markets, particularly the S&P. So keep an eye on that. As the S&P starts to pivot lower, this VIX is going to pivot higher. And then we should see some activity on the VIX. For those of you that trade the VIX or trade VXX, that could be pretty helpful for you. Now, I want to close up by talking about SLV. If you follow my Twitter page, I sold out of 5% on that candle today. And I did so 5 minutes after putting the post on X, formerly known as Twitter. I'm giving those who follow me a chance to get in or out of the market ahead of me. I do not trade ahead of my publications or ahead of my announcements. I'm letting you know what my intentions are before I do it. Now I'm out 15% with my average sell right around this level right here. So if we get a drop down to the moving average or to fill these gaps or any support level down here, I will be using the cash that I generated from the sale of 15% of my position to buy back into a bigger position. That is the most public position that I make known to the public because I'm using that as a more or less an instrument to show people how I trade. I can't tell you how to trade, but I can certainly show you how I'm trading and how I'm parlaying that position. Finally, tonight from 6 to 7 p.m., we're having the rapid fire stock analysis session. My goal is to go over 50 stocks in that 1 hour and give you some educational tips as well. I'm just going to slow it down just a little bit to add a little bit more value and content to that webinar. So again, from 6 to 7 p.m., if you're interested, go to stickytrades.com and I will see you there. Take care.